Time once again to check on the latest earnings trends with Zacks Director of Equity Research, Dirk Van Dyke. Dirk, as economic recession, the global credit crisis, and strained consumers all continue to weigh on corporations, you're telling us that just when you think it can't get any worse, it does.
Yeah, I was mostly referring to the number of increases versus cuts, and I mean it's been cuts overwhelming increases for quite a while now, but particularly for 2009, this has just gotten to unbelievable levels. I mean, the best single sector for 2009 were the electric utilities. The revisions ratio there was 0.16. So that's about 7 cuts per increase in the best single sector. For the S&P 500 as a whole, we're running at more than 12 cuts per increase.
So are we ever going to see an increase here for a long time?
I mean, eventually you got to get so low that there's going to be an overshoot and a balance that you just set the expectations low enough. I mean, we're not going to.
But that's what it's going to take: setting the bar, resetting the bar, lower and lower.
And right now, when you look at the overall expectations, the growth rate for 2009 versus 2008, we're still looking for fairly substantial growth.
What's your expectation for 09, for growth in 09? None, right?
Negative.
Negative growth. All right. So you point out here that current expectations on the street of 13.4% growth in 09 are delusional. Who in their right mind would expect anything anywhere near that number?
Yeah, well, I mean, it's sort of like, I think, each analyst sort of says, well, this company here, I think with this step, and this step, they can eke out this because they're operating off a low base and, things were, there's a little bit of a rebound. I mean, most of that earnings growth comes actually from the financial sector. If you X them out, we're actually slightly negative, and obviously there have been some real tough times in the financial sector. So if they just get back to sort of halfway normal, you got a lot of growth.
So but, it would be somewhat logical for those who believe that to be thinking that way right now?
Yeah, I mean, and that's virtually where all the growth comes from. I just don't see that recovery in the financials. I mean, yes, we've started to get most of the subprime stuff that's behind us. Perhaps even starting to get a handle on the Alt-A, but most of those resets are still in the future. I mean, you're going to really see a tidal wave of those resets and the resulting foreclosures in 2010, 2011. Something I've been saying for a while, but 60 Minutes just picked up on it this. I think the next scoop was that Lincoln has been shot.
Okay, so they're a little slow to come to the party, but that's okay. They're not bad people. Is it a surprise that earnings trends then are as bad as they are?
No, it's not a surprise, and I expect it to continue. As I said, because having higher total net income in 2009 in the face of the worst economy in my lifetime is irrational. I mean, it is delusional that we will have that, and so you're going to see a lot more estimate cuts, and because of that, I think the market's going to be facing a pretty stiff headwind.
All right, so let's take a quick review of your fourth quarter 08 expectations on average.
On average, well, the expectations for the fourth quarter on a total net income basis are for earnings to be down 0.4%. Again, mostly due to extraordinarily easy comps in the financial sector. I mean, if you recall last year, that was their supposedly kitchen sink quarter. Apparently, we needed more than the kitchen sink.
Right, we were through that last time. Right.
So, that on a total net income basis is supposed to help, but I think this is going to be an awfully rough quarter for the financials
but
too.
you're saying consumer staples expected to post a 15.4% growth rate. Might that offset the negative?
Yeah, I mean, that's one relative sort of normal-sized sector. Clearly, I mean, consumer staples, utilities, and healthcare, the three most defensive sectors, are the only sectors that are expected to post any positive growth other than the financials, where it's shown as a negative because it's going from negative to positive.
But not enough to offset.
I don't see it offsetting. I think there's an awful lot of pain still to come in, the durables, the industrials, the materials, and so far this year, up through the third quarter, energy has been providing a massive amount of total net income growth. That, with oil prices having fallen $100 from their peak,
right,
that's going away real quick.
But might any positive sign, this consumer staples earnings growth, whatever the number turns out to be, and wherever else little pockets we can find of growth, might that be enough to cause some hope on the part of investors?
I mean, I would certainly say focus on areas like consumer staples and healthcare and perhaps some of the electric utilities as the only places where you're going to see growth. I don't think that's enough to offset it for the rest of the stock market as a whole. But, if you're investing in individual stocks rather than the indices, those are probably pretty good places to hide out in this sort of an economic environment.
And the bottom line for the whole of '08, what do you think?
The whole of '08, we're probably, so far we're down about 18% through the first 3 quarters of the year. So, I mean, I suspect we're going to get something kind of similar, maybe not quite as bad due to the easier comps. But for the whole of '08, we're probably talking down at least 15%. I mean, the official expectation is 14%, 14.1. But I think we'll probably be a little bit worse than that.
What would have to happen in the corporate earnings trends for you to move your thinking closer to those delusional people that we talked about at the beginning of this piece?
Well, we would have to start seeing some evidence that the consumer is alive and kicking. And, I think certainly we need the auto bailout to occur to prevent that further implosion from occurring, which will do a real number on a lot of companies' earnings if that comes to pass. Mm-hmm. And, I think we need to get a very major stimulus package in place and operating very quickly, lightning speed. Washington has been operating pretty quickly lately, but I mean, we're talking, superhuman speed to get these things actually running, getting some demand back into the economy.
Okay. There are a lot of statistics in this most current week's earnings trends piece that Dirk has put together for you. I encourage you to go to Zacks.com, scroll down the page until you see Dirk's picture and the headline right next to it, and take a look at it, because it will give you a lot more detail than we have time for in this video webcast. With Dirk Van Dyke, I'm Terry Ruffalo.